We are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the crypto chaos shows no signs of letting up. Bitcoin continues its descent, more jobs being cut while the fortunes of billionaires are vanishing as quickly as they were made.
And the dual crises of Terra and Celsius are shaking up DeFi in ways that may have serious repercussions for the sector. We'll discuss with investor Mike Alfred, who's been sounding the alarm on Celsius for months.
And are there any bright spots left for crypto? We'll scour the market with venture capitalist Nic Carter of Castle Island Ventures for potential opportunities.
Looking forward to those conversations ahead, but first let's get a snapshot of the market because we know it has been several consecutive days of brutal selling for Bitcoin. Actually, its longest losing streak going back to 2019 with losses of now 3% today. We're trading around $22,400, $500 or so. That is the lowest level going back to December of 2020. So if you bought Bitcoin from the start of 2021 onward and you're still holding on to it, you have lost money. It's been really, really difficult. Ether is down about 1% as well. One outlier, one standout to the upside today is Solana. It's up about 4%, trading just under $30. And then, of course, one crypto company in particular we are monitoring is Coinbase, cutting 18% of its workforce due to the crypto winter. That stock is down about 0.6%, and we'll have more on that story in just a moment. But first, let's get the take of some market watchers who have been viewing the action over the last 2 days and trying to make sense of the mayhem.
Macro conditions are unprecedented.
In a market decline, everything goes down.
Crypto has not really existed with this sort of macro backdrop.
The institutional investor continuing to shy away from that as an asset class.
It's not surprising that something that is as ephemeral as crypto would go down.
There's just a lot of risk there.
We are certainly nearing the bottom.
Expect ups and downs, especially before we get a better regulatory framework in place.
I don't think people are going to basically abandon the whole concept of cryptocurrencies just because the market's down for the last couple of weeks.
All right, let's kick off this whip with some technical analysis. For that, we go to Bloomberg's Abigail Doolittle. Abigail?
Well, Matt, the crypto plunge really is incredible. And when I first started to look at the Bitcoin charts, which is down 70% from its all-time peak, I thought it was going to be set up for another plunge. That's not the case. This is the monthly chart, a long-term chart. You can see an uptrend. That tells you the long-term buyers are in. We're looking at Bitcoin relative to its 200-month moving average. Those are the buyers who bought years ago, back in 2010, 2009, and they've stuck with it. Right now, we see that Bitcoin holding that support, suggesting we could see a bounce. So maybe Bitcoin is close to the bottom. Maybe these last eight down days, that's capitulation. Now, when we put it together with the fundamentals, inflation as an inflation hedge, of course, also happening, this is Bitcoin relative to oil. So into 2021, Bitcoin outpacing oil. But then as inflation really came into the story, you see that oil has actually done much better than Bitcoin, the overall trend down. However, Kaylee, take a look at this. Bitcoin relative to oil finding support around the bottom of this trend channel. It may just suggest that in the near term, maybe the Fed meeting could be the impetus. We could see a pop for Bitcoin relative to oil.
All right, so maybe some more optimistic signs in the technicals. Thank you so much to Abigail Doolittle. But in another sign of the worsening crypto downturn, we had Coinbase announcing today it will lay off 18% of its workforce, following in the footsteps of other crypto-related businesses that have recently cut staff. Vildana Harik, Bloomberg cross-asset reporter, joins us now for more. So Vildana, obviously Coinbase is not alone. We've seen other firms doing this as well. It's emblematic, it's symptomatic of the crypto winter.
Exactly, and that's what a lot of these companies have been citing. So Coinbase is just the latest. It's the newest one that we've been hearing from, because if you'll remember over the last couple of days, we also heard from Gemini, we heard from BlockFi. It's really a growing list of crypto companies that have been announcing either that they're laying people off or some sort of hiring freeze. Just a couple days ago, it was Coinbase that had rescinded a bunch of offers from a lot of people who had, we all saw these headlines, who had been deciding between working in traditional finance maybe or working at Coinbase. And then they went with Coinbase and had those offers rescinded, and that was making a lot of waves.
Yeah, and a lot of them
big
had
splash.
already left their jobs, already moved to this country. Pretty painful news. This could also get painful for Michael Saylor at MicroStrategy, right? He's one of the most famous Bitcoin evangelists. I think he spent almost $3 billion amassing a war chest of the crypto for his company. And we're hearing now that he may face margin calls if it drops below 21,000.
Well, that was the big fear. So I know yesterday, amidst everything that was happening with the big sell-off that we were seeing, I had a lot of people reaching out to me saying this is something to keep your eyes out on. Still, we had strategists at BTIG, for example, coming out today and saying those fears really were overblown. We also had, if you looked on Twitter, Michael Saylor tweeting saying a lot of this is overblown, that when he had created this strategy of buying Bitcoin for his company, that he was looking ahead, foreseeing that crypto can be volatile, that Bitcoin can be volatile. I think he said something like he was hodling through adversity, which is just a term to say he's going to be holding on to these assets even during turbulent times. And we also had him telling Bloomberg that the company has ample collateral to pledge if necessary.
All right, Vildana, thanks very much for joining us on this. All of these challenges coming as a crisis at the Celsius lending platform causes fresh concerns of systemic risk in the crypto ecosystem. Sonali Basak has been tracking the meltdown. Sonali?
There have been some signals here. You know, news at Celsius is now rattling a market that has been trying to shake off the chill of a crypto winter. There's a hawkish Fed, red-hot inflation, mounting lawsuits, investigations, and also hiring freezes and job cuts. And let's not forget the implosion of the Terra stablecoin just last month. The meltdown has now turned attention to decentralized finance projects that offer super high yields. Celsius is one of the biggest lenders in crypto and a key player in the world of DeFi, the largely unregulated answer to traditional finance. And on Sunday, the company announced that it was pausing withdrawals, swaps, and transfers following weeks of speculation that it would be unable to pay out the significant returns it promised on its products. The move effectively halted a platform with registered entities across the globe and billions of dollars worth of digital coins under management. Now, while Celsius is a centralized platform with operations and staff that sets it apart from DeFi, its deep involvement in the space is intensifying doubts about its own viability and raising the risk of contagion. Now, rivals like BlockFi and Nexo took to Twitter in the hours after Celsius's announcement to soothe the nerves. And Nexo went a step further in its efforts to project strength. It said it would offer to buy Celsius's remaining qualified assets, and followed by tweeting that it had sent Celsius a formal offer for that deal.
All right, Sonali, thanks very much. Sonali Basak there with some of the Celsius story. Coming up, we're going to speak with an investor who's been sounding the alarm over Celsius for months. Mike Alfred joins us from Eaglebrook Investors.
And we'll get insight on Ethereum's blockchain revamp, the merge with Nic Carter, founding partner at Castle Island Ventures.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
This is Bloomberg Crypto. I'm Kaylee Lines with Matt Miller. Well, SEC Chief Gary Gensler is warning investors of crypto lending platforms promising high returns. Speaking at a conference earlier today, he said, quote, "How does somebody offer 4.75% in the market today? I caution the public. Think about it. Sometimes if it seems too good to be true, it just may as well be too good to be true." Joining us now is Mike Alfred, Eaglebrook Advisors founding board member. Mike is a crypto wealth manager and investor who has been sounding the alarm over Celsius for months. And of course, it is Celsius really that inspired these remarks, Mike, from Gary Gensler. As we say, you've been warning about this for some time now, yet it doesn't seem that everyone kind of caught on to the warning signs. What were they? What did you see to see this coming?
Thank you, Kaylee. First off, I just want to say I take no joy whatsoever. This is a very unfortunate set of circumstances that will affect a lot of people. You know, at the very top here, you got to start with the fundamentals. I mean, these businesses are essentially shadow banking, unregulated shadow banking businesses. They take advantage of a regulatory loophole. Since they don't accept USD deposits, they don't have to be regulated as banks. And they're offering yields historically that are well above what the market yield should be in a normalized environment. And so you just look at that and you say, okay, if interest rates are negative in Europe and interest rates are close to zero in the US and somebody's offering 17% or 20%, that's usually a red flag right off the top. Then when you look below the surface, what I noticed was that Celsius had actually been fired from two major tier one custodians in crypto already because they were uncomfortable with the amount of speculation and leverage that was going on within the platform. Then when you dig a few layers deeper from that, you discovered things like the former CFO was arrested while traveling in Israel related to a previous crypto scam involving a gentleman named Moshe Hogeg, who was also arrested. and it was a close associate of the founder and CEO of Celsius. And so again, there's layers and layers and layers here. But after I saw 4, 5, 6, 7, 8 of these things, I started to look more closely, and I thought it might collapse.
So why didn't anyone else, wise up to this? We just saw the CEO of Celsius 2 days ago, I think, tweeting out that there would be no withdrawals, or saying, like, we haven't had any blocks to withdrawals yet. And then the next day, they put the gates down. How come we didn't have anybody else wising up to this earlier?
Look, I met Alex 8 years ago. He was the CEO of Novotel Wireless, and he used to claim that he invented VoIP, right? He invented a bunch of other technologies. He's a very evasive guy. When you talk to him directly, he goes on and on and on, doesn't let anyone else get a word in. And there's a lot of signs that he's kind of living in his own reality distortion vortex. And so most of us knew in the space that there was something going on here. But if you talk about it in Twitter Spaces, it's not necessarily mainstream, right? The Wall Street Journal wasn't covering this, but we were covering it last summer in our Twitter Spaces. And so why didn't anyone know this was going to happen sooner? I would say people did, right? And I'd say that it wasn't just me, right? I was definitely one of the people talking about it earlier, but there were a lot more people than me that saw that there were issues here.
Okay, so obviously we're talking about Celsius specifically here. Is this unique to Celsius, or do you have similar concerns about other crypto lending platforms, other companies in that space?
I have. Last summer, BlockFi got trapped in a Grayscale Bitcoin Trust trade. And the thing I need to point out here, I think, is that we're at the very tail end of a decade-long bull market. Everybody's lost their head. This is not just a crypto problem. People were buying Shopify and Netflix and Carvana at 50 and 70 times sales. So the fact that they wanted to speculate on early stage companies is not surprising, right? Tiger Global got caught in the same trades, right? And these are supposed to be the most sophisticated people on Wall Street. And so it's not really any one company's fault. It's that the entire foundation of this market has shifted because interest rates were so low and there's too much liquidity. We printed too much money. So everybody's trying to buy BlockFi stock and BitGo stock and Galaxy stock, right? And some of these companies were just overvalued, right? And so the investors had to be in those names. I saw several investors who invested in BlockFi and Celsius last year who felt they had to be in, but they didn't do enough due diligence. And if they did, they said, you know what, I can't miss this.
Okay, so now that Celsius has collapsed, Mike, do you see how large of a risk do you see of broader contagion?
I think it's going to be pretty well contained. So Celsius was probably the worst of the group in terms of their risk management frameworks. I mean, they're still to this day speculating on DeFi protocols. As we are talking right now, there are hundreds of millions of dollars shifting back and forth on chain, even as the customer assets are frozen. So this is completely irresponsible behavior that you would never see, in most sophisticated large firms. The other firms like BlockFi, they already paid $100 million settlement to the SEC. They've mostly ceased these type of activities. The CEO came out and said that they don't actually have any assets in these same protocols. So I think some of these other firms got religion sooner. And so even though they made mistakes, I don't think they go bust. Whereas Celsius, it's an open question. We may need to wind Celsius down in sort of an orderly receivership type of scenario.
Mike, I want to ask you about staked Ether. There were concerns about Lido for amassing a big stake. I know that Celsius was a big holder of staked Ether as well, and now the difficulty bomb has been delayed. What do you think about the merge and how far it'll be pushed off?
I'm not sure, right? I made a joke the other day on Twitter that it'll be 2050 and we'll still be talking about the merge. But a lot of issues have come out of this Ethereum staking ecosystem for Celsius. I mean, they lost $75 million in Stakehound alone, and that was just a loss of keys, right, by the people managing the protocol. So I'm not going to make any predictions specifically about what happens there, but I do think they need to stop the compounding the errors and the mistakes. They've blown a hole in their balance sheet. It started last spring. They blew a $40 million hole in their balance sheet in the spring. They bailed themselves out with equity, but they can't do that anymore because they keep losing more and more and more money the more they try to do to save the assets. One other thing I need to bring up, they also have a duration and sort of a liquidity mismatch problem because they have investors that want their money back now, but I believe they may have taken some of that money and put it into this e-liquid mining business. And you cannot take a mining business public right now, in spite of them filing an S1 a few weeks ago, which I actually found to be a huge red flag because nobody in their right mind would try to do that in this environment.
All right, Mike, it's been great to get you on. Hope we can talk to you again soon. Mike Alfred there of Eaglebrook Advisors talking to you about Celsius, the collapse, and the fallout. Coming up, Nic Carter, founding partner of Castle Island Ventures, focused exclusively on public blockchain research and investment, will talk to us about his expectations. This is Bloomberg.
I don't think these things are disappearing. Their values will fluctuate for sure. Sure, if you bought it at $60,000, you've lost a lot of money. And I'm not saying these are great investments, but I think these are investments that aren't going to go away. And I don't think the whole crypto economy is going to collapse, nor do I think blockchain is going to disappear. I don't think people are going to basically abandon the whole concept of cryptocurrencies just because the market's down for the last couple of weeks.
Carlyle Group co-chairman and co-founder David Rubenstein joining us to talk about the sell-off in crypto a little bit earlier. I want to get to Nic Carter right now, Castle Island Ventures founding partner, one of the first research analysts on Wall Street before that covering crypto. Nic, it's great that you could join us. I have seen so many kids recently that had jobs on Wall Street leave for blockchain or DeFi opportunities that now look like they're going to evaporate, and so many people in their 20s and 30s that have had almost all of their wealth tied up in crypto devastated by the drops that we've seen recently. What does this do for confidence in the entire crypto universe?
Yeah, I think we're seeing sentiment at pretty much an all-time low. I don't think I've ever seen people feeling this negative about the industry. All of that said, there are still plenty of crypto firms that are hiring. We were seeing layoffs for sure, but the sort of core ideology that powers this movement is intact, right? You have to look at these things in contrast to the fiat currencies that they seek to replace and the traditional financial infrastructure they seek to replace. Those fiat currencies to me look like they're being debauched right now. So while of course we're having a leverage flush in the industry, I think the core ideas are still pretty intact here.
So in terms of institutional interest, which has been one of the big drivers on the way up until November, do you think those players are still going to take part in crypto?
It really depends. We're seeing some institutions are getting burned. If you look at Celsius, which we were just talking about on the prior segment, Canada's second largest pension fund is an investor. So not all institutions are the same. Some will exit the market and become disillusioned. Others will rebalance and double down here, which I expect to provide maybe a floor on the valuations of some of the highest quality assets here. The general institutionalization of the industry is an ongoing trend, which I certainly don't expect to reverse anytime soon. And I think the actual power of decentralized financial infrastructures will continue to be persuasive here.
Okay, so Nic, you talked about Celsius, and of course that followed just weeks after the collapse of the Terra stablecoin, the Terra Luna ecosystem as a whole. How much of what we have seen, the pain we have seen in crypto, is due to some of these specific events versus just a broader macroeconomic environment that has turned away from high-risk assets like cryptocurrencies?
Yeah, it's easy to ascribe these sell-offs to singular events, but I think you're right. It is, to me, it's more of a broader macro picture here. We're looking at yields rising relentlessly. We're looking at bonds selling off alongside stocks, which is not meant to happen. So clearly, the financial sector as a whole has experienced enormous distress as liquidity is being withdrawn. And things that aren't meant to happen in financial markets are happening. We're going to have the Fed hiking into potentially a recession here. These are, situations that no living investor has ever lived through, frankly. This is pretty unprecedented stuff. So the fact that, a pretty frothy asset class is getting crushed here is not really that surprising. But yeah, to me, there is a deleveraging occurring with Celsius and Terra and things like that. But I believe it's really more sort of the broader macro context which matters here.
Okay, so do you see any reason to be optimistic, or are there certain bright spots or pockets of opportunity still, Nic?
Absolutely. We're still investing actively. We're deploying. There's a huge amount of dry powder actually raised by venture funds on the sidelines here, which I expect will be deployed into the market. I'm not seeing enthusiasm stemmed there at all. Fundamentally, the story is intact. Bitcoin offers a sound money. And if you look at its alternative, the dollar, inflation is 8.6%. You're looking at other sort of blue chip currencies like the yen being crushed. And we're looking at the potential and position of serious monetary repression in this country. So I think if you're considering sound monetary assets, look at them in contrast to what's happening in the financial system. If you're looking at stable coins, that you're going to see crypto dollarization continue to occur as we have potentially a wave of sovereign defaults here, crushing emerging market currencies. All these things, the broader macro context, it's, hurting us in terms of liquidity being withdrawn, but it makes the fundamental case for these assets stronger than ever.
Well, one of the big tailwinds was the idea that we could get greener by switching from proof of work to proof of stake. That was going to happen with Ether. Maybe still will, but it seems to be delayed again, right? We've had concerns about Lido, too much of the stake being held by one custodian, and now the difficulty bomb being delayed. It's very jargony, but when is that going to happen, or is it going to happen?
Well, yeah, I mean, I expect it to happen. You're looking at, late this year, early next year. Certainly do expect that transition to occur. But I think you also nailed the problem with proof of stake, which is why it's not necessarily desirable to move away from proof of work to proof of stake, is that proof of stake allows for concentration of control, and it gives the largest stakeholders control over the network. So, while that will occur for Ethereum, it's not something I would prescribe for Bitcoin, for instance. And I do think proof of work still has sort of key benefits here.
All right, well, we'll all still be waiting and waiting and waiting. We'll see when and if it actually happens. Nic Carter of Castle Island Ventures, great to get your insight. Thank you so much. Matt, I really enjoyed the conversation with Nic today, as well as with Mike on Celsius. And we should mention we did reach out to Celsius, see if they'd like to talk to us for an interview. We didn't hear back. But Celsius, if you're out there, if you're watching, we'd love to have you on next week. We'll be back here Tuesday at 1 p.m.
If you're still there, we'll still be here. Coming up next week, Amy Wu, head of ventures at FTX, and Delta Blockchain Fund founder Kavita Gupta joins us to talk more about crypto. This is Bloomberg.